In 2011, when I launched the Gold Investment Letter, it was impossible not to have your attention taken about, at that time, the rare earth metals came into the foray and became, front and center, and there was a bubble that was actually taking place in that space. But, had me pay attention to where are we going to get, some of these critical materials that go into all these different components of things. And that not only, includes some of the magnets and magnet metals and things of that nature, which is a very interesting story going forward, because that was a long time ago. I mean, it was over a decade ago, and there was a lull where you kind of looked at, I can see the potential of that, but it's very far into the future. I recall distinctly doing my research from 2017 in the middle of the year through 2018. And whether it was a nickel company, or it was a lithium company, or it was a copper company, or a manganese company, or a graphite company, or whatever, all of them had their adoption curve scales on electric vehicles. And it seemed like I had this pattern that was zeroed in on, which is there was an apex that happened right around 2024 in virtually all of these presentations, that if we see this level of adoption in the electric vehicle purchases around the world, here's when you're going to run out of these materials, and you're going to start to have to run at a deficit to keep up with the growth, because there's not been the type of investments in finding and discovering new mines, which takes a very long time and a lot of capital, especially if you find a new deposit and you take it through the various stages, the 43-101s, the preliminary economic assessments, the pre-feasibility studies, the feasibility studies, and then you're getting into a point where you're going to build a mine and go into production. That can take 10 to 20 years. And we have not seen that investment with low commodities prices generally over the past 2 decades into finding these new mines. That's why you're looking at this potential deficit, because it's not the usual hum-ho of typical applications for really all metals. Many of the metals are used in various green energy or critical battery metal applications. Everybody had this apex, and all of a sudden I'm lifting up my head, and here we are in, we're in late Q1 of 2023. The market is a forward-looking mechanism, and what I'm seeing right now for the opportunities are some of these companies that back then were making these projections and going to look for new mines and new deposits, and they've been busy for 5, 6, 7 years and have essentially been drilling and building up their asset base. Well, now we actually did see that type of adoption in the electric vehicles, and there's a lot of activity that's going on behind the scenes right now. For example, one would be in the nickel sphere. A company, and this is a disclaimer, I own a lot of this stock myself, but GIGA Metals. This is a nickel company that has a massive asset called Turnagain in Canada that not only has a lot of nickel, it has a lot of cobalt, a lot of platinum group metals as well. But just from a nickel standpoint, and what the work that they've done over the recent decades, they've got a 40-year mine life projection. This is not a small asset. It is very large. And we saw Mitsubishi companies invest in GIGA 6 months ago. They didn't actually invest in GIGA Metals, the corporation. They gave $8 million Canadian to get a 15% piece of the Turnagain asset. Now, this is a big car company. Mitsubishi is very large, one of the largest in the world, that I give a lot of credit to, because they took a step forward and they locked in a stake in potential future production that is years away. But they are seeing, and all of these companies that have any electric vehicle business whatsoever are realizing that they have big problems in the supply chain, particularly after the year 2027. And so Mitsubishi puts this money in, and this just goes to show on the mining side, GIGA Metals trading right now at less than a $25 million US market cap. They had arranged that investment at twice the market value of the company, $53 million Canadian. This is the type of opportunity that I like, because you have a scenario with plenty of money in the bank. Then, being at the PDAC conference in Toronto, We saw MCEWEN Mining, which had done this deal with Stellantis. And Stellantis is actually the fourth largest car manufacturer on planet Earth out of Argentina. They own a number of different brands that everybody would know about, even though they're not a household name. And they invested $155 million US that they invested into MCEWEN Mining, which has the 9th largest undeveloped copper asset on planet Earth. And it's in Argentina, and they will continue to denominate and be able to utilize copper from that mine for decades, but it is not even close to being in production. I mean, you're looking at least several years to get it to the point, probably closer to 5, where that's going to be a producing mine that can actually send copper to this car manufacturer. But they came and they did what I believe all these different companies are going to have to do, which is go and take your interest in the supply chain, and you're going to come to guys like me and to investors that own the mining stocks. And you're going to be begging us for access to ownership in the dirt for future production on mines that are not even producing yet in all of these different metals. And that is a story that goes along the base metal side. My favorite, I think, being nickel on the base metal side, even though I am bullish copper. And also in the specialty metals, which is where it gets really interesting. The company that I would bring something new in and shed the light on is, instead of a bunch of different lithium companies or the base metal companies, is, disclaimer, I own a little over 7%, I believe, of this company, and it is a fairly small cap entity, about a 30 million US market cap, and that would be Phenom Resources. This company is a vanadium play. And vanadium, if you'd like to get into that, is where I think that there's some real torque for investors. Vanadium is a critical element needed in industrial solid-state scale clean batteries. And we have a newish invention called vanadium redox flow batteries that has been surfacing for new demand. The biggest demand for vanadium, it's a fairly small market, is for addition to stainless steel. From what I understand, you add about a 2% component of vanadium to stainless steel and essentially make it twice as strong. With the components that are now applicable to these future drivers of growth, in addition just to general economic activity and building stainless steel, certainly the reopening of China will help and is helping already for the price of vanadium, I'm sure. But you've got a couple of different areas of new demand, which are these solid-state batteries and the vanadium redox flow batteries. Everything that I see out there, there's many different proposals for the growth rates, but generally speaking, I would put it at around a 35 to 40% compound annual growth rate that is projected for the vanadium market, mainly driven also by more steel adoption, and that market has been expanding even in a down marketplace, but also for the redox flow batteries alone and the solid state batteries, which get into these industrial scale batteries. But now we've got a new component, and this company, Phenom Resources, that is a small cap entity, has the largest and highest grade undeveloped vanadium deposit at surface in North America. It's located in Carlin, Nevada. But you also have, a lot more maturity in terms of what we're seeing in other companies, mainly Asian, that are stepping in and I believe looking to lock in, just similar to GIGA and similar to MCEWEN. They want to, and they're going to have to, go ahead and secure supply of future vanadium production from a company like a Phenom that is essentially far away from production. But they're the biggest, they're the highest grade in North America, and there is nobody to talk to when it comes to the producers. You have really two bigger companies called Bushveld Minerals, which is out of Australia, and Largo Resources, which mainly produces out of Brazil. We're seeing some signs behind the scenes that there are companies that have developed, they've cracked the code essentially of minimizing the technology, the base battery that actually can apply to electric vehicles as well. And we've heard, even though this is not quantifiable yet, I think by the time it gets out there and we start to see it, vanadium prices could very well double or triple from here based on just this new market capacity that's coming in. And we've heard that they've done recent studies of a vanadium-fueled electric vehicle battery that can happen in 30 seconds or less. I mean, I don't have an electric vehicle, but they take hours to charge. You have the governor of California asking if they could come out and electric vehicle owners could charge their cars overnight so they didn't stress the grid. And here we have a material that is not explosive or flammable, which is massive. It's potentially half the cost for a vanadium electric vehicle battery as it is for a lithium-ion battery. It's rechargeable, recyclable, and these things last over 20, 25 years. And you don't have to worry about where you're gonna dump it. So if those things are true, and if we're seeing that type of technology surface, then you have this small nascent market that is controlled by the Chinese. It's controlled by the Chinese and the Russians. They produce almost 80% of the metal, and they don't share very well. And I think that we've got a problem with the American government and even in Canada, which also hosts some interesting vanadium deposits. We produce barely above zero of vanadium in the world per year. It's controlled by who we have concerns over, in other areas of the world. And we need to get our act together. And I think that companies like Phenom are very rare. It's just like when I got into the business back in the mid to late 90s, we didn't even have mobility with mobile phones. We didn't have the information age. We didn't have computers. We didn't have the internet. So trying to envision what that looks like from a foggy glass is where the opportunities come in. And with this space, here's all I know. And this is my most bold statement, but I believe we're seeing it happen right now. It's not about something that's going to occur in, 5 years or 3 years or 8 years or 10 years, even though it will still continue to be occurring at that time, is that everyone, when you look at the car manufacturers, let's just use them, but I'm talking about companies that rely on raw materials to build refrigerators or stoves or microwaves or anything, buildings, whatever it is, they are all coming to us. They're all gonna have to look at securing their future supply chains in the dirt vis-a-vis mining companies. You cannot be green, you cannot be involved in and or believe in and or want this clean battery energy and non-fossil fuel world unless you mine. And the mining of these battery metals and the base metals are going to be necessary components, and they just don't exist past, call it 2027 is where I start to see a cliff fall off. It just so happens I'm not talking about this today where we have record high valuations and bubbles in the stocks of the companies that are mining this stuff. Because if you start to see the story stack up and the type of companies that are coming in the background and already doing these deals to show us what's coming, you would think that they would be trading at multiples that are on the excessive range. Instead, because of the macro environment, we've got a lot of doubt, worry, and contraction that had been going on in the world economies, and the stocks are trading at multi-decade lows. So for me, that's a pretty interesting equation to invest in. And not that we're gonna pick necessarily the bottom today, but who knows, we might. There is a lot of activity in these areas that I see going on that is very, very bullish, and it is not being reflected in the equity prices yet.